Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Friday, October 19th, 2018. This one will be quick. I just want to cover a few levels, and bigger picture really hasn't changed or won't change unless we, break those long-term supports or take out some overhead resistance levels, which I'll cover in this video. Which could spark a rally to, maybe possibly new highs. I still favor the downside scenario, but it's as I've said lately, it's anybody's game. This continues to be, my analogy is a big, heavyweight fight between two sluggers. Today, so far, the Bulls take it. Yesterday, the Bears took it. The day before, the Bulls. It's been back and forth, big swings, and we've really gone pretty much nowhere for the last, pretty much this week. Okay, so this candlestick right here where the little cursor finger pointed, that was Friday's close. Here, I'll put the crosshairs there. That horizontal line, so you can see we were above Friday's close today from last week, and we just crossed down below it. So we've literally, well, not literally gone nowhere. We went down from there, we went up from there, down, back up, and so that's that. We were up respectively today on the Qs well over 1%, and now, they're starting to fade that gain. So let's dive into the charts, and I will try to keep true to my word of a short video here. So here we have a chart that I put up in the trading room right when trading started, right after the market opened. And what I pointed out is this 175.67-ish resistance level on QQQ. You can see, again, this is just a screenshot from earlier this morning right here, right after the market opened. It's a level I've been watching, and you can see even recently, I can't zoom in because it's a screenshot chart, but there it is. That defined that level 175.67, and so far, let's get rid of that. You can see we stopped cold there and have reversed. Now, what I've done since then, this is a 30-minute chart, just so I can zoom in a little bit more. I color-coded that line blue, and I added 4 other levels so they'd stand out. These are the levels I think are important. When I look at this chart, and to me right now, it's all about the Qs. I'll get to the SPY in a second, but SPY is below a pretty significant resistance level. Didn't even really come that close today. So to me, it's all about QQQ and tech. And these big market leading FANG stocks. So those are the levels, and it's you can trade off them, or you can watch them if you're a swing trader, not an active trader. An active trader could have shorted 175.67 for this pullback here. That's support, and again, you can see if you look to the left, these lines aren't arbitrary. I didn't use fibs or anything. I'm just using price support and resistance here. So there's all the reactions there, 174.29. Maybe reaction there. We could go a little lower because you can see there's a gap there too. So maybe the Qs want to come in and not a full backfill would take us, if you can see that dotted line, that's yesterday's close. That would be a full backfill. Sometimes you just come to the previous candle right there. That's 173.78. Either way, these are levels to watch. Now today's options expiration, expect a little volatility as there's a lot of position squaring, but bigger picture, whether, again, an active trader can trade off these levels, go long here, try to game a quick bounce, or short a break of it, either for a backfill of the gap or down here. But the point that I made when I posted this chart earlier in the trading room is these, I think, are key levels. Each, if and when taken out, and remember, I started with a 60-minute chart. This is a 30-minute, but you want to see probably a 60-minute close. In other words, you're going to get these little spikes above support and resistance, especially when the market's volatile like that. So that is, you can see both of those candlesticks. These are 30-minute candles close back below that level. So what I'm talking is an impulsive break, and you'll know it when you see it. This was an impulsive breakout above that 174.29 level. We gapped up above it today, right above it, and then you had a very impulsive move. That's a breakout candle, and just like you have a breakdown candle right here, impulsive. You hold that level, and boom. So that's what I'm talking about, a breakout. So if we get an impulsive or convincing break above 175.67, then the next stop there is 177.52, and I really, really want to see that level contained to keep the bearish case alive. It'd be better if we failed here. If you're position obviously bearish and looking for a move down, the lower on these, the lower levels you fail at and move lower, the better it is. But we'll see. The market right now, again, as I just pointed out, we've gone pretty much nowhere since last week, and I don't think that's going to continue much longer. Anything's possible. So if we take out 177.52 with conviction, yeah, there's a big level up here for QQQ around 180 to 181, and that is certainly a mountain of resistance, a wall of resistance, we'll call it. But these are the near-term levels I watch. So 172.29 goes with conviction, and then anything more than a back gap backfill there, we're coming down probably to 172.50. If that level goes, and it's not a hard level, I could actually add another line here. But what I'm looking at, just so you know or at least you give you an insight to my thought process, there's a big gap back there. Once we gapped up, this right here that defined the bottom of it was a support level. It was choppy trading, so those candlesticks go through there, but it's from about 172.50 down to about 171.50. Much below there, yes, there are some candles, but it was very brief. We only went down there shortly. We snapped back up. So I think that would really open the doors for that waterfall type selling that I talked about, or I've been talking about. And that scenario I have that takes us down another 11% or so in the Qs, 8, 9% or 10% in SPY. And again, anything up here, there's still work to be done. I don't see us exploding the same way to the upside. Anything is possible, but I still think there's going to be a wall of resistance even if we pop this level. The market has some work to do at to the upside. That's what I'm trying to say. Whereas the downside, it's pretty darn thin. Not a whole lot of support once those lows back from January go. There's support back on the daily chart, but so far in 2018, that if you zoom in here, this is 2018 right now. Oh, there we go. That's what I'm talking about. I'm talking about revisiting the lows. There it is. If we break those levels, these lows, and that 153.90-ish level. And there was some choppy, erratic trading in there before, but for the most part, this has been the range that we've been in for the last pretty much second half of the year so far. Okay, and as I said, SPY right now, this is that big level. It's comparable to, what is it, 2,800 on the S&P 500, well-defined level, and we're still below it. And I said earlier, we did come up. We came up and kissed it today, and you can see almost a perfect failure there. But we're still well below it right now. And we had a high of 279.30 versus my level of 279.26, close enough for government work. So failed four pennies. 4 pennies above that level in reverse so far. So that's a level I'm watching, and that would also align with QQQ. Remember, that's at today's highs. The SPY hit that level and reversed, as QQQ, as I just showed you on the 30 and 60-minute chart, reversed at that level that I'm watching here, 175.67. Now we'll call it 175.70 if you want. So those are the levels the bulls want to see get taken out. Because we've had another reaction there to help validate them, they're all that more technically significant. However, a failure there so far is what we've had, and now you want to watch for these levels on the downside, see if these support levels hold or break. Last but not least, I also posted this in the trading room this morning for you futures traders. This is that 15-minute chart of NQ, NASDAQ 100 futures I've been posting lately. They're all salient levels on there, whether they're horizontal price support lines or trend lines. So that was a big trend line there, and it formed this triangle pattern, symmetrical triangle. We had the breakdown right here, and so if I extend this trend line, and that's what I did, I posted it this morning, we were down here. And so we hit that trend line plus 72.25 price support, or resistance, I should say. So there was dual resistance there, and that certainly provided an objective short entry when you have not one but two resistance levels. And so far you can see it had a nice reversal, and as I'm doing this video, it has now brought us down to this uptrend line. So interesting stuff. So odds would favor a bounce here. We just hit that level for the first time, but we're starting to compress now. So what I'm looking at is really forget about the other lines for now. Let's focus on this triangle here, symmetrical triangle, and we have some price compression within getting close to the apex. So this puppy's going to break one way or the other soon. It's going to break to the upside or the downside. It has to break one way or the other because you can't go past the apex without getting out of the triangle. And that's that. So we'll see what happens. And again, I'm leaning this way, but fully open to any possibilities. If we start punching through those overhead levels I talked about, then it may be time for, me personally, what I'm doing shouldn't affect what you guys are doing, but then to start reining in short interest, or at least not add if we get above some of the levels I mentioned in recent videos. That's where I'll stop adding and start covering. All right, 10 minutes. Let's wrap it up here. It was a little longer than I thought, but a 10-minute video is not bad. So those are the levels to watch. And my guess, it's Friday. It is options expiration, so you can expect some, price swings throughout the day, which we've already had. We have one sharp rip up, followed by a fade down. There it is. Today's this rip up, followed by an equal rip down. That's what you get trading in this market recently. That's what you get trading OPEX. But at least an active trader can game these, trades off these levels. And I think the takeaway is they'll probably park it somewhere today where it keeps everybody guessing over the weekend, bulls and bears alike. In this market, if we didn't gap one way or the other on Monday, I'd be surprised. So we'll see what happens. Maybe how we close today might give us a little insight as to whether there's more willing buyers or willing sellers out there. In other words, especially if we close red now, we still have a healthy gain on the NASDAQ 100. The futures are up 0.72%. The Qs are up about the same right now. And, if they can build on those gains and park it higher, so be it. But let's try not to read too much into any one day's price action. If anything big happens today, I'll post an update by the close. But if not, this might be the last video for the week, since I really don't expect much, anything technically significant to change in the charts today. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.